Good evening, everyone. This is Mike Bridges coming to you from lovely, sunny Southern California, where it was about 80 degrees today. I'm currently dressed in t-shirt and shorts, so those of you who live where there actually is a winter, um, my sympathies. We've got plenty of sunshine here to go around. Maybe we could send you some sunshine and you can package up some of that snow and we can melt it over here and hopefully get rid of the drought that we have. But in any event, it's about 5:30 or thereabouts on Sunday evening, the 15th of February, and I want to play a little market movie for you today. Much of this is for my students, but it's also going to be helpful, I think, to anyone else who wants to see what's been going on either with our course or our new auto trading program. So bear with me, and we'll get rolling here in just a second. Okay, this is Mentor Mike's Market Movie. We've got some real money trading results for the week ending Friday, February 13th, 2015. And once again, our intrepid cameraman is saying, should I let Mike trade for me or should I learn to trade for myself? I know I'll do both. Well, I'll let Mike earn my tuition to take his course. And there I am again. You've probably seen this bio before. I'm a retired California attorney specializing in financial planning. I've held a number of FINRA licenses, including Series 3, 7, and 66. I've also held a number of insurance licenses here in California. But my favorite thing to do for most of my adult life has been trading futures. Been doing that since 1984. That's over 30 years ago. And I've been mentoring other traders since 2000. That's now over 15 years ago. I have been registered with the NFA and CFTC as a commodity trading advisor. My favorite market and method is day trading the S&P Emini. My favorite platform is NinjaTrader 7, and my favorite brokers are Trenton Kimino at Global Futures for self-directed traders and Dan Neenan at Striker Securities for auto trading investors. And those of you who don't already know it, I have a regular blog page on the website of the Pacific Trading Academy. You go to pacifictradingacademy.com and then to blog and select Mentor Mike's Market Movie. And we post something up there just about every single day. And most definitely since we have been active now for 2 full weeks in our new auto trading program. Now, to reiterate what our cameraman said in that first slide, do you want to invest in an auto trading program and have the trading done for you? Or do you want to learn to be a self-sufficient, self-directed trader? Or would you like to do both? Many of my students also participate in our auto trading program. And in my live trading room, we duplicate the trades being made in PTA's RealMoney account. In other words, my students are learning while they're earning. Now, our POV system day trades the S&P Emini futures because, in my humble opinion, that combination of method and market earns the most profit in less time and with less starting capital than anything else I've seen in my 30 years of trading. POV's ultimate goal is to turn its participants into members of the upper 2% of American taxpayers who earn at least $250,000 per year. This equals average income of $1,000 per day, Monday through Friday, for 50 weeks a year. Thus, POV's immediate goal is to earn a net profit of $1,000 plus per day with a 9-contract account, or a minimum daily average of at least $112.50 per contract. Now, the big question is making $1,000 a day a realistic goal? Well, let's take a look at this past week's trading. First of all, on Monday, the 9th of February, we were trading 22 contracts and we made a net profit of $2,805. And when I say net profit, I mean after deduction of a $20 flat rate per contract transaction cost. So what you're seeing here, folks, is real money trading. No demo trading, absolutely real money. All right. Then on Tuesday, we were up to 24 contracts, and we made a profit of $2,735, again, net of the $20 per contract transaction cost. On Wednesday, the 10th? No, 11th, we had our first losing day. And we were trading 33 contracts that day, and we lost $5,185. Now, before you gasp and grab your chest, it's not quite as bad as it sounds, because we measure our per contract wins and losses, and in that sense, it's something that we were able to recover from. But it was still our first losing day on our 8th day of real money trading. We had 7 consecutive winning days, and on our 8th day we had this. So we adjusted our daily goal so that we could better absorb the effects of losing days going forward. And so the very next day, Thursday, the 12th, we were back in the saddle again, this time trading 42 contracts, and we had a net profit of $7,052.50. Then on Friday, we slipped just a little bit once again and had a loss of $2,900, trading 45 contracts that day. So these are the charts. They don't tell you a great deal. Let's take a look at the numbers, and that I think will make more sense. Now, these are the results from our very first week. We had a great week, won all 5 days, made a total of $10,022.50 of net profit. Remember, our goal was $112.50 per contract average each day. We made it with room to spare on Monday, fell a teeny bit short on Tuesday. Then again, we exceeded it on Wednesday, Thursday, and Friday. We got quite a bit above it with $142.50. So our cumulative daily average per contract was $125.63 after this first week of real money trading. Now, here is our second week. The week just ended. On Monday, we traded 22 contracts and earned $2,805. Our average per contract that day was $127.50. Tuesday, 24 contracts, another $2,735. Our net that day was just slightly above our goal, $113.99. Wednesday was our first losing day. 33 contracts, lost $51.85. That was a loss of $157.12 average per contract. Came back strong on Thursday, trading 42 contracts, made $7,052.50. Our average that day was $167.92. Now, you'll hear more about this. It was on this day that we raised our goal from $112.50 to $162.50. So you can see we reached our higher goal on Thursday, and that's going to be our goal going forward. Unfortunately, on Friday, we lost $2,900, so that is a minus $64.44 average per contract. We still made money this second week, $4,507.50. So our cumulative total is now up to $14,530. And our cumulative daily average per contract is now at $81.56. So remember our goal is $112.50, so we're approximately at 72.5% of what our daily minimum goal should be. We're shooting for $112.50, but right now we're at $81.56. However, since we have raised our daily goal to $162.50, if we can succeed in hitting that goal more often than not for the second half of the month, there's a good chance that we could make up for lost time here. Now, let's also see what the approximate 2-week real money profit would be for these various account sizes based on an average contract a day of $81.56. Now, we're still rolling out this program, and new accounts are opening each day just about. So not everyone has been in the program since day one. There's been at least 3 accounts that have been, but not everybody. So these numbers are assuming that the account was open and active all 10 trading days that we've had so far. So bear that in mind. If you had a one contract allocation in your account, you would have made thus far approximately $815.60. For the two contract account, double that, $1,631.20. Three contract account, and I think that there are some three contract accounts that have been with us since the very first trading day. They're up to about $2,446.80. Six contract account would have made $48.93.60, and the nine contract account would make $7,340.40. Now, the full tuition for my course is $4,990. So you can see that after just 2 weeks, our six contract trader would have almost earned back his tuition or earned enough money to take the course initially. And our nine contract trader would not only have recouped his tuition, but have a pretty nice little profit left over besides. So we're definitely making some money here. We knew that losing days were inevitable, and one of the things we needed to do was to figure out how we were going to adjust our goal. But in answer to the question, is $1,000 a day a realistic goal? It definitely is. Now, this is the plan that we've put into effect on this past Thursday. Increasing the daily per contract profit target to absorb the effects of 3 losing days per month. The following plan is loosely based on the numbers observed in our losing day on Wednesday, February 11th, 2015. Now, here are the assumptions. In this scenario, our monthly goal is $2,000, and to reach our goal, we must net $100 per contract daily times 20 trading days per month. We'll assume also that we average 1 losing day out of every 6 trading days, or 3 losing days per month. On a losing day, we do not make the $100 target, and in addition, we lose $150 for a total deficit of $250 per losing day. Now, in the above scenario, we would have 17 winning days in a month, and that would produce a profit of $1,700. And the 3 losing days would effectively remove $450 from that total. Remember, there's an actual loss of $150 times 3 losing days. So our monthly net would be $1,250, which is only 62.5% of our desired monthly total of $2,000. But now imagine those same assumptions, but this time we raise the daily goal from $100 to $150. After 5 winning days, we would have the previous goal of $100 a day, and in addition, we would have accumulated a cushion of $250 to absorb the ill effects of 1 losing day. So in this scenario, 17 winning days would produce a net profit of $2,550, and the 3 losing days would again remove $450 from that total, for a monthly net of $2,100, or 105% of the desired monthly total of $2,000. Therefore, to apply this scenario to the real world, and until we have more accurate statistics, we will raise our daily goal from $112.50, which is essentially 9 ticks per contract, to $162.50, which is 13 ticks per contract. This is an increase of approximately 44%. Now, you can see here that on Wednesday we lost $157.12 per contract. But Thursday we put back $167.92 per contract. So in effect, we wiped out this loss with what we earned on Thursday. Regrettably, we still had a small loss the following day, so we are slightly at a deficit. Now, some of the account holders who opened their accounts on Wednesday or thereafter are not completely whole at this point, but I think there's an excellent chance that they will be in the money before the end of February. But the people that started at the very beginning are doing pretty well. So again, we had a subtotal this week of 4,500 and change, and our cumulative total is a little over $14,500. So right now we're making 72.5% of our minimum daily goal, and by increasing the daily goal from 112.50 to 162.50, every time we hit that goal, we'll be shaving a little bit off of this deficit and getting closer to what it's going to take to average $1,000 a day for a 9-contract account. Now, here again is our losing day on Wednesday, the 11th. And one of the things I'm going to do that will, I think, help our win-loss situation is I'm going to go back to a template that we've used previously. Now, this one has essentially a triple MACD. And I like it. It's very aesthetically pleasing to the eye. Unfortunately, the red, white, and blue crossovers are not the quickest signal. And this template works very well when we have a high volatility market. And in our first week of trading, the volatility was very high. Remember, volatility is essentially the ability of the market to move vertically on the price scale within a specific period of time. And when volatility is high, our average true range will dictate 8-tick initial targets. Well, we can make money very fast with an 8-tick target. When the volatility drops and we are relegated to a 5-tick target, it takes longer and more trades to accumulate profit and to hit our goal. And this second week of February, the volatility dropped substantially, and I think from Wednesday on, it was such that we never had a single 8-tick trade, if I'm not mistaken, whereas we had 8-tick trades virtually every day during the first week of February. So when volatility drops, it's not good to have a chart template where the signals are anything but very aggressive. Now you can see that we have a faster MACD histogram, that is the darker blue here, but unfortunately those turnarounds are difficult for me to read. Some people can see these histogram bars when they get shorter or longer fairly easily, but for me, I need a basic crossover. I need a line of one color crossing another line of a different color. So to test my theory, I use the replay function on NinjaTrader to replay our 2 losing days on Wednesday and on Friday. So this was our original chart from Wednesday, where we lost 51.85. And here is my replay chart. Now, I still lost 2 trades in a row. Now, I didn't try to memorize what the chart configuration was. I really traded it, albeit in a replay, as though I were seeing it for the first time. So here's the good news, though. I actually hit this day's profit goal on these first 2 trades. So if this had been my actual trading on Wednesday, I would have never gotten to these 2 losing trades. I would have already been out after the first 2. So that's something to consider. But then afterwards, these 2 trades gave us great signals, but simply didn't go anywhere. We had a bearish red, white, and blue alignment with rising volume that only sold off a teeny bit, and even tried it again, and no luck. Then we had a bullish red, white, and blue alignment on both price and oscillator, again with rising volume, and it went nowhere as well. Finally, we were able to get back in the saddle with this nice long trade, and then from then on, we had a series of successful, this was a short trade, and then we had some successful long trades, and even one last short trade over here. But even so, and with more contracts than we were actually trading on Wednesday, we still ended up with a slight loss of about 3,067. Now, the original loss with fewer contracts was 51 something. So we made progress at least, but it just goes to show you that there will be days when, despite our best efforts and despite the best tools we can bring to the party, the market's going to have the advantage over us. But again, even though we've raised the daily profit target that we're shooting for, which is going to make it more difficult to hit, we would have hit it in these first two trades, and that would have been that. Now, here is our original chart from Friday, where we lost 2,900, pretty much all because of this one trade. And again, we're using the red, white, and blue MACD configuration, and I replayed it using a slightly different configuration of our MACDs, one where we can make better use of the faster histogram as a means for entering trades. And again, these first three trades would have been sufficient to hit our profit target on Friday. This one loser, again, good signals, just didn't go anywhere. This would have set us back, but on the next short trade, we would have gotten back to the point where we would have hit our target and could have quit. So these other two long trades at the end were really just frosting on the cake. Now you notice the score is a whopping 14,187.50. I actually did this one first before the Wednesday one, and at the time I didn't realize how to set the replay function so that it deducts the commission. So this is a gross amount of profit with no commission deducted. The commissions at $20 per contract excuse me, would have come up to $6,300. So we still would have had a very successful day. And again, we would have hit our target on the first three, again on this one, and etc. So I'm going to go back to this template because even though I don't like it as much, it's not as pretty as the other one. What it does is it allows us to get a faster entry by using the histogram of our faster MACD, as opposed to waiting for the crossover on the medium MACD. So I think that's going to help significantly going forward. Now, if you are interested in becoming a self-directed, self-sufficient trader, you should really think about taking my course. Go to PacificTradingAcademy.com, go to enrollment, and click on Mike Bridges' mentoring course in Trading Room, and here you can read all about it. You can actually see the course outline, and when you're ready, you can find out what it costs and how you can pay. Now, I'm offering a generous tuition discount on my mentoring course and Trading Room package for a limited number of viewers of this video. The regular price for my course and Trading Room package is $4,990, payable $29.95 on enrollment and $19.95 in 30 days. My discount offer is in the form of a partial scholarship that will cover your second tuition payment of $19.95. Thus, successful candidates will receive the entire mentoring course and Trading Room package for just $29.95. That's $2,995. But to qualify, you must apply. And if you send me an email so requesting, I will send you this scholarship questionnaire. Give me your answers to these questions. That will help me evaluate your fitness for this scholarship. And we'll have a telephone conference that we'll set up at our mutual convenience. And then I will very quickly let you know if you've qualified for the scholarship and if you can go forward for the reduced price. Now, in addition, I want all of my students and graduates to know that PTA will pay a referral fee to any current student or grad who refers us a new enrollee in my mentoring course and Trading Room package. This commission will be 10% of the tuition actually received by PTA from the enrollee. The referrer can accept the commission in cash or redeem it for extra time in the trading room or a combination of the two. But what if you have no time to day trade? Well, my POV system can work in position trading too, but as I'm sure you probably know, Position trading requires a lot more capital and a lot more time. For example, the overnight margin for the S&P Emini is probably around $4,600, whereas the day trading margin can be as low as $400. So big difference there. But what if you simply pay me a modest monthly fee to day trade for you? This is a screen capture from the website of Stryker Securities in Chicago. And here is a brief explanation of my POV system. Here's a more thorough explanation. As you can see, there's 5 different risk levels. You can have a 1 contract allocated account for $5,000, 2 is 7, 3 is 10, 6 is 20, and 9, which is the goal that everyone should shoot for, is $30,000. And remember, if we had a 9 contract account holder who has been with us the entire 10 trading days thus far, that person has already made over $7,000. So what's a $7,000 return on a $30,000 investment? Are you going to get that anywhere else? Probably not. Anyway, if you want to get more details from this page, you can freeze the video and read it at your leisure. Now, again, take a look at these figures. This is based on 81.56 per contract per day. And again, it does assume that you had your account open since the beginning and that you were participating for all 10 trading days. But here's something to consider. If you're a student and you've paid your tuition recently or sometime in the past, this is a pretty good way to recoup it if you've had trouble doing it yourself. Also, if you'd like to take my course but have limited funds, you might want to consider joining the auto trading program. And once you've earned enough profit to pay for the course, take the course and learn how to do it on your own. The only way that you're ever going to be completely financially independent is if you have the wherewithal to make the money you need yourself and are not dependent on someone else. You know, we always have somebody that we need to help us, but if you can make the trades that you see me take in the trading room, then what do you need me for, right? And so think about that. Now, if you want to open the account with Stryker Securities, here's the man to talk to, Dan Neenan. There's his address, his phone number's in Illinois, and of course the Stryker web addresses. And if you have general questions or comments for yours truly, if you'd like to get a scholarship application or have more questions about auto trading, although Dan is really the guy that can answer those for you. But in any event, if you want to talk to me, there is my email address, mittermike@charter.net. Please include your phone number, Skype name, and time zone. But better yet, just become my student and enroll. You'll get a chance to see the trading that actually goes on in the auto trading program. And here, once again, is where you go on the Pacific Trading Academy website to sign up. So, there's our little presentation for this President's Day weekend. I hope that you have a quiet and relaxing Monday, and we're going to be back at it on Tuesday. So all my gadgeteers plan on meeting me in the trading room, and I will see you there. Wear your steel-toed boots and bring your clipboard because I intend to kick ass and take names. All right, see you then.